South Korea's stock market went from one of the hottest AI-driven bull markets in the world to one of the fastest bear markets in just a matter of weeks. The KOSPI had surged to a record high in late June, but then collapsed by roughly 25% to 27% from the peak as leveraged retail investors were hit with margin calls and forced liquidations. Within about 2 weeks, the KOSPI fell around 20%, and on July 13th alone it dropped nearly 9%, triggering trading protections like the sidecar and a level 1 circuit breaker. A few days later, on July 16th, the market fell another 6.37%, deepening the sell-off. What made this especially damaging was leverage. Korean retail margin debt had climbed to a record roughly 38 trillion won, up more than 70% from the end of last year. When prices started falling, the losses were not just paper losses anymore. Brokers began issuing margin calls, and those calls triggered forced selling, which pushed prices down even more. That is why many people say the bubble has already popped for a large number of investors. Reports indicate about 1.2 million leveraged retail accounts were hit by margin calls, and hundreds of thousands of accounts were forced into liquidation. Once your account is liquidated, the long-term story no longer matters very much to you. Your personal bubble has burst. This is the classic pattern of a bubble unwind. You get a near vertical rally, a narrow group of AI and semiconductor names leading the market, record leverage, and then a violent reversal where forced selling feeds on itself. Even if the AI story is still alive fundamentally, the structure of the trade broke under the weight of leverage. If you enjoyed this video, remember to like, comment, subscribe, and turn on notifications to not miss out on the next videos.